Today we're going to be doing some technical analysis for the SPY Qs, Apple, Tesla, Amazon, and Nvidia. And first, we're going to start off by talking about that reversal signal that we've been pointing out for the past couple weeks. And if you missed out on that, the reversal signal we were talking about, this is something that has called many reversals, many bounces, and many overall bottoms and tops in this market since July. And that is a divergence between the SPY going to an upward move and the Qs going to a downward move. And you know that this is not the correct signal at this time because we have officially taken out this high on the Qs. That just means that you can see that now we do have that kind of similar projection between the two stocks here. Between these two ETFs, we can see that we have similar direction at this point, so that reversal signal is not holding true, but that doesn't mean that we can't see some kind of downturn. So when those reversal signals get invalidated, it's important to look a little deeper into the actual stock itself. So we're going to look at the SPY first, then we're going to get into the Qs. And I've added these pink lines in here. This is actually the expected move for tomorrow, okay? So if you do want to mark these on your chart, this is the daily expected move for tomorrow. And we do get CPI data, so it's a very important day, and it looks like we have a pretty strong move coming. And when we get to this on the Qs, it's going to be really cool, okay? So we want to pay attention to the Qs. We can see the SPY here. What we want to pay attention to is probably the shorter time frame. So if we go into a 15-minute, we can kind of think of what could happen, or at least prepare ourselves in case something happens early on in the day. So what we'd want to pay attention to, you can see that to the upside here, we have that level of about 465.87. So if we do get outside of that range, that just means we might want to come back into it by the end of the day. So we can land within this range tomorrow with 68% of the time. And overall, the main thing I want to talk about here is if we actually break down early on in the day and we come to this side of that daily expected move, it's a good chance that we're actually going to see this start to build back up. So we really want to pay attention to that, because if we do reach one of those sides of that expected move early on in the day, we actually could see the script flipped and see that come back the other way. So as we are seeing this flatness in the MACD on a 15-minute, hey, there is a chance that we do sell off tomorrow if that CPI data maybe comes out a tiny bit hotter than expected. But we would be paying attention to this level of 458, my apologies, 458.05 to the downside is what we would pay attention to. Now, if we do get excited and that CPI data comes out as good, then we would really want to pay attention to this upper level at 465.87. Okay, so that's how we can use this. And you can just say to yourself, hey, if you do have a position or something like that and you're still long on this type of thing, then you can see that go up to here. And if that's a lot for one day, which it is, then you can see some sellers step in around this area, and it's a great profit-taking tool. With that, if we do see some kind of further breakdown in the morning, maybe even go and touch that expected move, it doesn't have to happen, but if we do, we can see that we have this flatness in the MACD and we would be rolling over. If that happens pretty quickly, we actually can remain in positive territory even on the 15-minute. Okay, so if we point out the 15-minute here and we do get that dramatic selling or some kind of selling in the morning, that could just be some kind of consolidation to then head higher if we remain in positive territory on the MACD. I did give you that range for the Qs. You can do this for the SPY and the Qs, not necessarily individual stocks. So I did give you these for tomorrow, and you can see that to the upside, we're landing exactly on. The expected move is exactly to 400. And we are gravitated, when we do get those whole numbers, we like to gravitate towards them. People really like them in the market. So if we do see some positivity, we could see 400 actually be the point of resistance as of tomorrow, which is sitting right next to that weekly expected move as well. So we really want to pay attention to this level to the upside. If we do see that bullishness, we're coming outside of that Bollinger Band at this point. They were tight, so we can see this start to expand upward. And the thing that I would really pay attention to, and this is why I want to point it out on the Qs, it's just a little bit clearer, but you can see it on the SPY as well. I'm just going to really zoom into this MACD and show you if we do cross to the upside, and then we would be getting some kind of divergence at that point. So you can see down here on the RSI, we would have a flatness or some kind of divergence, and then on the MACD, we would have that if it's able to roll back over. And then the Q is a little different than the SPY. I just wanted to show you an hourly, okay? So the same thing holds true if we do break down. Look for this level of 391.08 to hold as some kind of support and maybe rotate higher. If we do see this MACD curl over on the hourly and then curl back up, we can see that positive trend continue because we're up here in positive territory. So that's just something we want to pay attention to, but also on the hourly, I just wanted to point out we are very overbought on the hourly, but because we're getting data in the morning that could really affect the market, the technicals here could go out the window, and if that is positive and seen positive for the market, we can still extend higher into that overbought territory. So in the morning, maybe we do get some kind of flagging or something like that, but I just want you to be prepared in case that data actually pushes us to new levels, because we saw a lot of stocks actually struggle today, and those will most likely catch up if we get some good CPI numbers. Lastly, I just wanted to say on the Qs, you don't necessarily have a 15-minute divergence. This looks like it, but I don't see it between the RSI and the MACD at the same time. I really like them to both be on the same page at the same time, right? So if we do see some kind of further consolidation and then head higher, then we would point out that divergence maybe going into that Fed rate decision on Wednesday. So I just wanted to point out right now, this divergence you're seeing on the MACD is not accompanied by a divergence on the RSI. So I wouldn't really hold that to anything at this point. I'd really be looking for some kind of consolidation, curl up, and then find that divergence at that level. But really pay attention to that 400 because we do gravitate towards those whole numbers a lot of the time. One stock that as of right now has confirmed a divergence is Apple. We get these highs up in here and we can see down here on the MACD, we actually crossed as of today. So we did cross on that MACD today and we see that divergence come into play. We can see that divergence here on the RSI as well. So this could lead to some kind of overall pullback. But I'm just stating that tomorrow with CPI, it's been very good to us in the past, and we could see this extend higher, even going up to that monthly expected move. And as you can see on Apple, I actually put the weekly expected move up here for you, the top side and the bottom side to that. I like to give you guys one every single week. So you can see on Apple here, if we actually headed past that monthly expected move, we can see that point of about 200, right? Those whole numbers, 200.09, come into play, and maybe we get a big resistance up in this area. The last thing on the day that I want to say is the fact that we're able to go below this 9-day moving average and then hold up. Hey, I should give you guys a thumbs up and a pat on the back for this one because we were mentioning how we most likely do want to reconnect and test that 9-day moving average before we actually hold or go higher. So as of right now, we can see that we got that test. We're starting to head higher. We actually came into the weekly expected move, the bottom here. So we can see that we are getting some buyers coming in. If we get some good news tomorrow, we could see some bullishness to close this gap, and we could even go test some of these ranges here. All right, how about we do it now? Give yourself a thumbs up and a pat on the back because we were pointing out this triple divergence on the 30-minute chart here and this wedging. And overall, we were just stating, hey, you most likely can come fill that gap or go test that 9-day moving average. And we were just stating, pay attention to this gap fill and pay attention to the bottom side to that weekly range. Okay, so if you are wanting these weekly ranges before market open on Monday, you can get that down in the link below in the description. For my Patreon, I give it to you every Sunday so you can have it on your charts for the week before it even starts. But give yourself a thumbs up, pat on the back if you did find this information helpful. I really appreciate it. Maybe even give the video a like. But from here, we can see we left behind another gap. So if we do get positivity, we're going to be drawn to that area. And then at the same time, the weekly expected move is all the way up at 200. So if we want to get really bullish and even go outside of that monthly expected move, we can see that level of about 200 come into play as some resistance. We were able to get into negative territory on a 30-minute, right? Now we have to see, are we going to get into deeper levels and actually confirm some kind of negative trend with a lower low? Or are we actually going to buy back up into positive territory and start a positive trend for the short term, most likely until we see more news with the Fed coming out Wednesday? As of right now, the CPI has been very good to us over the past few months, so I am leaning a little bit more towards the bull side as of tomorrow. Amazon, we pointed out how that negative trend kind of started right here. You see that negative trend come in with that low, and then you see the lower low. And then as we start to get back into positive territory, we start to make higher lows. Now, at this point, you do have this low here and a lower low. But I would like to say that we left behind this gap and we could come test this area again. And the fact that we've tested this area so many times tells me that it's important and we could see an explosive move if we break above this level. And what I want you guys to pay attention to and what I'm paying attention to is if we break through that level and then by the end of the week, we actually are seeing that fade. That is a good signal that this market has topped and that we are actually going to see a bigger pullback and maybe that Christmas rally is canceled. Tesla looks like it's sitting within a range within a range, right? We're coming into these lows here and we're holding up at that area. And when we come up into these highs, we kind of see that resistance come in. So you're really looking for that break to the upside or a break to the downside from these overall bigger range, right? But also you can pay attention in the shorter time frame to this area up in here and this area down in here. If we start to break below that level, I would really pay attention to this level down here. And if we start to break above this level, then we can see, are we breaking out of here and going to test this high up here, or are we going to go even higher and get some more retest, right? We can retest this area again, and we really want to pay attention to that to the bullish side, as CPI has been bullish the past few months. Now, the key thing with Nvidia here is going to be this MACD for me, okay? This MACD is going to be very important over the next couple of days because there's a little more space between that crossing, okay? So it actually could not confirm, right? We could see this, start to go up tomorrow and then not confirm the next day, and that would be very telling for what's to come. So right now, you're overall to the bullish side thinking this could be some kind of big A, B, C pattern to the upside, and if that cross happens, you have a very good probability of that happening. But right now, you want to see if this is actually a different one, an A, B, C pattern to the downside. And what can happen here is we can see that buying come in and then not cross that MACD, see that fade towards the end of the week, and then get that second leg down into this zone that we've really been paying attention to for Nvidia. On the hourly, I just wanted to point out we do have a series of lows, higher lows, higher lows, higher highs, higher highs. So right now you are in a positive trend. We're in positive territory. So if we do get some good news, we most likely will see this high taken out and go test another level. So I'm really paying attention to a little bit higher levels. So I want to see if we can come all the way back up into this 481 area by the weekend and see if we close above that area. Because if we do close above that area, then most likely that MACD on the daily will be crossing and we will see another leg higher in Nvidia. On Nvidia, since it is leading this market, right? This is the one that crossed on the MACD first on the daily, told us some downside was coming. It started that negative trend with these lows in here going lower, and now it's looking like it's creeping up into positive territory. What I really want to pay attention to is, as of tomorrow, if we actually see some kind of, head and shoulders form along this neckline, and see if we can actually see that break down with that Fed the next day. So I'm really going to be paying attention to this, and I'm going to bring it up in tomorrow's video if it comes to fruition. Yields here, we actually did not cross on that MACD. That's the overall signal I'm waiting for, but we are maybe going to close above that 9-day moving average. I would just say with the CPI, we could see this come down, and it'll be interesting to see if we're able to see that come back up and creep up and then close again above the 9-day moving average, because that may be enough to actually confirm this MACD crossing and say that there may be some momentum in these yields to go to the upside, which can mean very bad things for stocks. We could see these rates going higher when a lot of people are talking about pivoting. We actually discussed that in my previous video. Highly encourage you to just go into my channel, click on the previous video, and find where we talked about these yields, because I think it tells you kind of how a lot of people in the market itself has priced in some big rate cuts, and I don't think we're going to see that from the Fed. I feel like we're going to see that standard of higher for longer kept. Now, real quick, I'm going to show you that other signal, that other reversal signal that we've talked about on this channel for quite some time. So right now you see the SPY is actually going up to higher levels, and then we're actually going to switch over to TLT. TLT is actually going to lower levels, okay? So we're seeing this creep down while the SPY actually goes higher, and that overall has been a signal because this is the smart money versus dumb money, right? So we can probably pull up HYG right now and see that it has the same signal as well. This is the high yield growth, right? So we can pay attention to the fact that right now, high yield growth is making lows, or at least new lows, while the SPY itself is actually heading higher. And that's something that we really like to pay attention to on this channel. It calls a lot of reversals. The VIX, the main thing here that we can continue to talk about is these Bollinger Bands are very tight and an explosive move is coming. So if we do get that bullishness tomorrow, look for this level of 1212. This level of 1212 is known to produce a bunch of volatility once we test that level. So I'll be really paying attention to that, but this just tells you that volatility can come back into this market very quickly if there is some bad news. Last thing I wanted to talk about is the dollar, because it is getting tighter and tighter on these Bollinger Bands. And even though we're seeing some stocks sell off and we're seeing the VIX go down, the SPY go higher, we're not seeing the dollar necessarily drop off. Okay, so you really want the dollar to start to close below this 200 again to get that bullishness back. But as of right now, you're closing once again, even in the next few hours, you may be closing above the 20, taking back another moving average. And that just means we may go test this 50. And if the dollar goes up, stocks are going to come down. So the overall takeaway from this video is we're going to see some big moves most likely over the next couple of days. And that's why I felt it was important to give you guys some daily expected moves for the next couple of days. So I am going to do that again tomorrow. So join us back tomorrow night for the expected moves for that Fed rate decision and the economic projections. And overall, I just wish you guys have all the luck in the world tomorrow with trading. Stay safe out there, manage your risk, and I hope you have a great night. Peace.